Morning students, welcome back to the session on this discussion on accounting standards. In the previous session we discussed about a couple of standards, years 4 and 5, and then we also touched upon some of the concepts related to years 29, which was about provisions, and wherein we also discussed as to how a provision will be different from a liability. Quickly, just to recap whatever we discussed in terms of liability and a provision. Liability, we can say, is an obligation or is a present obligation which arises because of the past events and which involves outflow of economic resources. And whenever we say that the amount which is involved in the liability or the timing in terms of the outflow is uncertain. Okay? This involves substantial degree of uncertainty or some sort of estimation is involved in this. Then such a liability is called as provision instead of a liability. Okay? Yeah. We also understood this with the help of examples. Very good. Next is about the discussion in relation to this provision, contingent liability, and a contingent asset. Okay, so before I touch upon these concepts, quickly over to you. If you can confirm about the status of homework, because Ayush has confirmed he has completed the homework, and I'm just hoping that all of you would have completed the homework. Please confirm quickly. Homework is all done. Yes, homework is all done. Please confirm quickly. Homework is all done. Okay, great. Sakshi has also confirmed. Okay, good. Kamal has confirmed. Homework is completed. So I'm just hoping homework is all completed. Okay, Gilbert has completed this. Sheil is done. Very good. Shivendra has completed this. Khushi has completed. Very good. Okay, so now moving further, as around the provision, let's try to understand what is a contingent liability and how a contingent liability is going to be different from a provision. There is an analysis which is required to be made in respect of provisions. And I would suggest if you can refer to page number 1.144. If at all you want to refer this, you may refer this. Otherwise, you may just remember about an analysis which is called as Ppr analysis. Now, what is Ppr analysis? Let's try to understand. In case of Ppr, P stands for probable. The second P stands for possible. And third one stands for R stands for remote. Yeah. So now, whenever there is something which is probable, so what do you mean by probable? Probable means which is more likely than not going to happen. This is more likely than not. Or in other words, we can say wherein the chances of happening of an event or occurrence of that event are more than 50%. So we are saying probable is a situation wherein the chances are more than 50%. And let's now bring in one example to understand this. Sushil Limited. Yeah. This company received a demand from the income tax department, and the company went into a litigation as against that demand. Now, company has also consulted as around the chances of winning this case, and the company has also involved consultants in respect of this demand because it's a huge demand. Let's suppose if, as per the assessment of the company, chances of losing this case are more than 50%. Now, what is going to be that more than 50%, whether that will be 60%, 50%, 80%, 90%, we are not talking about it. Because this is very, very judgmental. I'm just using this percentage term for the purposes of our discussion only. So the moment we say that the chances of losing this case are more than 50%, in such a case, what do we call it as? We call it as probable. Means it is probable that Sushil Limited will lose the case. And the moment we say it is probable, provision is required to be recognized. So in this case, what will happen? Because it is probable, so provision will be recognized. Okay. Let's suppose if it is not probable, if it is possible. So what do you mean by possible? Possible means a situation of 50-50. Situation of 50-50 means we are not sure. If I continue with the same example, let's suppose if Sushil Limited is unsure as around the outcome of this litigation. Yeah, there are 50% chances of winning the case, 50% chances of losing the case. What do we call it as? We call it as the second situation, possible. And the moment we say it's 50-50, then the provision will not be recognized in the financial statements. In such a case, what do we do? In such a case, instead of recognizing a provision, contingent liability will have to be created. And what do you mean by contingent liability? You can just simply say the moment we have this situation of 50-50, then instead of provision, we will give a disclosure in the financial statements. Now, this is again very, very important. Provision is recognized. Means you will pass an adjustment entry for provision. But contingent liability is not recognized. Contingent liability is only disclosed. So you will never pass an accounting entry for contingent liability. You will only give a note in the financial statements in respect of a contingent liability. So the moment we say it's possible, it's 50-50 situation, then instead of recognizing it, we move on to disclosure of a contingent liability. Third scenario means wherein chances of losing the case are less than 50%. Or in other words, we can say chances of winning the case are more than 50%. Yeah. So either way we can understand this. So the moment we say chances of losing the case are less than 50%, it becomes remote. Remote means something which is more likely than not going to happen. Sorry, less likely than not going to happen. More likely than not was this one. And in case we see that the outcome of this litigation in terms of Sushil Limited losing the case is remote. Means there are good chances, there are more than 50% chances of Sushil Limited winning the case. In such a situation, neither the provision is recognized nor a contingent liability is disclosed. Means both of them will not be done. In fact, nothing will be done in the financial statements. So you can say nothing is required. So in the financial statements, we don't do anything. Neither create a provision nor disclose a contingent liability. Okay. Clear on this point? Yeah. This is called as PPR analysis. Practically, when you approach any of these things, you call it as PPR analysis. And for the purposes of this standard, you will also need to understand that this standard largely deals with two things: provisions and the contingent liabilities. And what do you mean by provision? This is basically what will reflect the provision or which will lead to a generation of provision. And this is something which will lead to a contingent liability. Understood? Yeah? Any questions in case you have on this, please let me know. Then we'll pick up one example to discuss this in more detail. Okay, Manish is clear on this, Sakshi is clear on this. In the meantime, I received a lot of your responses. Surbi, Anushka, Manish, they've all completed the homework. Then Artis Vasu has also completed. Sushil is saying it's not done, no problem, so you should plan to complete it yourself. Yeah, Vedashri has also completed. Very good. So now, for the purposes of our discussion, I think we can pick up one illustration. So let us move on to illustration number 1 on page number 1.149. Illustration number 1. Everyone start reading this illustration and you only need to solve this. You need to solve this, let me know the solution. So that's why you need to start this quickly. At the end of financial year ending 31st December 2000X1, so it's a calendar year, a company finds that there are 20 lawsuits outstanding which have not been settled till the date approval of accounts was done by the board of directors. Till the time financial statements are not approved by the board of directors, 20 lawsuits were outstanding. The outcome, as estimated by the board of directors of the company, is as follows in respect of those 20 cases. In respect of 5 cases, so we can say cases 1 to 5. Probability is 100%. And this 100% is for winning the case. Okay. Next 10 cases. Next 10 cases means 6 to 15. Therein, chances of winning are 50%. Chances of losing with a liability, when they lose, what is it that they are required to pay? 1,20,000 are 40%. 1,20,000 then 10% for 2 lakh. Okay. Then for the remaining 5 cases, similar sort of assessment is given. 16 to 20, 50% chances for winning. Then we have 30-20. 30-20, and the outcome is 1 lakh and 2 lakh 10,000. One lakh and 2 lakh 10,000. Outcome of each case is to be taken as separate, means it needs to be taken as separately. Don't take it as separate entity, separately. Ascertain the amount of contingent loss and the accounting treatment in respect thereof. So basically, in this case, you are just simply required to comment how will you deal with these 3 categories of cases. Yeah, we can just simply say there are 3 categories of cases. Okay. So can you tell me what will be the outcome, or how would you deal with these? So I'm sure you would have started answering this. Abhishek is asking, sir, regarding the probability, can we say it's based on personal judgment and it can vary in situation? Of course, yes. Anushka is saying these will not be recognized. Okay. Kamal is saying next 10 cases and remaining 5 cases, means 6 to 20. You will create a contingent liability. Okay, great. So if you say you will create a contingent liability, can you tell me the amount of the contingent liability, please? Yes, tell me the amount of the contingent liability quickly. Yeah, I'm waiting for the response. Vedashri is saying we need to disclose the contingent liability. Fine. Dilbert has completed this. Dilbert is saying provision created on 40%, 1,20,000 10%, 2 lakh 30%. So I think she just repeated all of these points. Is it? So can you tell me the net result? So this is a bit confusing, but if you can just clarify what will be the total amount of contingent liability and what will be the total amount of provision. So that is something which should help me. Currently, the way you have just presented it, it's just difficult to understand. If Vedashri is saying contingent liability of 10 lakh 40,000. Alright, what about others? Ramakrishna is saying all these cases are less than 50%, so nothing is required. Okay, any more thoughts? Anushka has also computed the amount of contingent liability as 10 lakh 40,000. Great. Any more responses from your side? Should we go to the solution? Okay. So let's break it into 3 parts. So the accounting of these will be done on the basis of their categories. Yes or no? So as around the first 5 cases, chances of winning the case are 100%. Chances of losing are remote, 0%. So should we create a provision? Answer is no. Should we disclose a contingent liability? No. So nothing needs to be done. Fine. Okay. As around these 10 cases, chances of winning the case are 50%, chances of losing the case are 50%. So what is the situation? 50-50. In case of 50-50 situation, what do? Disclose a contingent liability. So that means outcome is clear, it's a contingent liability, but the problem is computation of amount. So how do we compute this? 40% chances are that the company may have to pay 1,20,000 and 10% chances are payment of 2 lakh and 50% chances are payment of ₹0. So what do? 50% into nil plus 40% into 1,20,000 plus 10% into 2 lakh. So what do we get? 68,000. So there will be a contingent liability of 68,000 in respect of these cases. Yeah. For this third category, once again, what do we see? 50% chances are for win, 50% chances are to lose. So there again we get contingent liability, and there again we will compute the amount of contingent liability with a similar basis. 50% into nil plus 30% into 1 lakh plus 20% into 2,10,000. So what do we get? We get 72,000. Okay. Now, for the number of cases that we have, if we have to compute the contingent liability on a total basis, so what do? Total contingent liability is going to be, either we can just simply say 68,000 into 5 over here only, but due to space I am just creating it separately. 68,000 into 5 plus, 10. These are 10 cases, 68,000 into 10 plus 72,000 into 5. So I think we will get 10,40,000. Yeah. So the total amount of contingent liability in respect of these 15 cases will be what? 10,40,000. I think same is the response from Kamal, Sruti, and Sakshi. Where Ayush is saying there is some confusion, sir. That I have the probability column shows what? Does it show probability of winning or winning or losing? So the probability column shows exactly what is written in the question. So there should not be any confusion. All of these percentages are towards winning the case or losing the case will always be available to you in the question. So go back to the question, it's very much clear over there. Okay. Okay, Christina is asking, sir, why did we multiply 40% with 1,20,000? Why can't we take 1,20,000 and 2 lakh as a contingent liability? Because here we are just applying this mathematical principle. So this is arithmetic that 50% chances are there for losing the case. Now the moment you say, you will just take total of these. So what is going to be your amount? So you are saying that if you lose, you will end up paying 2 lakh plus 120, that means 3,20,000. But is that correct? So if you lose, is it that you will be required to pay 3,20,000? No. There are 40% chances that you will pay 1,20,000, and there are 10% chances that you will pay 2 lakh, and there are 50% chances that you will pay nil. So weighted average is what you compute in such a situation. Same thing we have done. Anushka is saying, sir, in case one, it is remote. That's why not recognized. Okay, I think Anushka has given the response. Very good. Ramakrishna is saying, why we consider contingent liability less than 30%, less than 20% win chances. See this less than 30%, less than 20%, I think you are not reading the question. Please go to the question now. These are for losing the case. I'm just not writing everything because it's there in the question. I would suggest that please read the question carefully. Huh? Okay. All of you clear on this? Yeah. So I'll just quickly summarize. Whenever we have a situation of probability, means it's probable, means more than 50% chances are there for occurrence. So what do? We create a probability. In case it's 50-50, then we disclose a contingent liability, we don't create a probability. And in case it's less than 50%, then nothing is required. Yeah? You will not do anything. You will be thinking, but sir, in such a situation, should we give a note in the financial statements? No. Nothing. Nothing is required to be done. Okay? Priya is asking, sir, is the loss given per case? Because in the end, we multiply with 10 and 5 cases. See, if you look at the question, it's specified over there. Question has specified that this assessment, the assessment which has been given is per case. Yeah, they are just specified it's per entity. Basically, it's not per entity, it's per case. All right. So we can now move further. So maybe for the purposes of your notes, you may just go to a flow chart. This flow chart is given on page number 1.143. Yeah, so I would say flow chart on page number 1.143, and then there is a table on the next page 1.14. So just make a note of these two. At the time of your examination, when you need short notes, summaries, so these two things will help you quite a lot. In terms of understanding almost every provision of the standard, you can just refer these two. Yeah, when I say every provision, I am just talking about the most important provisions out of these standards. Okay. Now moving on to next concept, that is about contingent assets. In relation to contingent assets, we can just simply say that whenever the inflow of economic benefits is not probable, then what do? we will consider that to be a contingent asset. So I'm just applying the principles of contingent liability to a situation of asset. So what is an asset? First of all, if we have to understand about the meaning of asset, something which involves inflow of economic benefits. When did you recognize an asset? When the economic benefits are probable. Again, I'm using the term probable. Probable means there are more than 50% chances that economic benefits will arise. When more than 50% chances are there that the economic benefits will arise. So, when the economic benefits are probable and the cost of the asset can be measured reliably. So, this is the definition of, or you can say, recognition criteria of an asset. Now, let's suppose, again, in case of an asset, we are not sure as to when the economic benefits will arise, that means the timing, and we are not sure what will be the amount involved in terms of the economic benefits which will arise. Again, there is an uncertainty which has been attached to this. In such a situation, what do? You will not recognize an asset. You will consider that to be a contingent asset. Means a contingency has been attached to this. Okay. The moment we say it's a contingent asset, then similar to what we do in case of contingent liability, you will not recognize it. So these are not recognized. These are recognized only when the certainty is there, or you can say uncertainty is removed. And the moment uncertainty will be removed, it will become very easy because we will say it's an asset. Yeah. Number two, unlike a contingent liability which is disclosed in the financial statements, contingent assets are not disclosed in the financial statements. They are disclosed in the report of approving authority. So they are disclosed in the report of approving authority only. Number one, I think is very easy to understand if you link this to contingent liability, because definitely for a contingent asset recognition is not possible. The only thing which you need to remember for a contingent asset is that this is neither recognized nor disclosed in the financial statement. So that means this will stay away from the financial statements. So we can just say nothing needs to be done in the financial statements. And please underline this point, the financial statements. Because these are required to be disclosed in the report of approving authority. Okay. Now, let us just take an example to understand about meaning of contingent assets in a better manner. Okay. Gadam, I will come to your query. Yes, Sanjay, please wait. I will come to your queries. Let's suppose there was a demand against the company. Since this was Sanjay Limited, there was a demand against the company, which the company has actually paid. Okay, so there was a demand, this has been paid, and this has not been recognized as an asset in the financial statements. But the litigation is still going. Say the litigation is for rupees 1 crore. Okay. Now, as around this case, company was not sure that they will win this. That's why they paid this amount and charged it. Provision was created, charged. Okay. Now, say for example, the company won this case. The company won this case. At tribunal level. Yeah. So if the company won this case at the tribunal level, what will happen? This money will come back to the company. So there is an inflow of economic benefits now. And in this scenario, definitely an asset should be recorded for this 1 crore. But let's suppose department went in for an appeal. So went to higher level. So now what is the result? That this matter is still under litigation. But the good thing is that company has something positive at the background. That they have won the case. So now because they have won the case, so that's why now what are we into in terms of this assessment of the case? Now because the department has went in for higher appeal, so for higher level, definitely company is not sure whether this amount will be received or not, because once again this will be contested at the higher level and the company will win or lose. But because the company has won the case at a lower level in the past, so that's why company would now believe at least this to be 50-50. Yeah. In which case this will change into a contingent asset. Okay, or you can say this will therefore become a situation of a contingent asset. Understood? Yeah. But this contingent asset, please understand, you will not recognize in the financial statement. You will not disclose in the financial statements. Okay. And further, for your discussion only, contingent asset has not been discussed in too much detail under Indian GAAP. And this is not something on which we really need to focus too much of our time. Yeah. Coming back to the query of Sanjay. Sanjay thinks that why don't we create provision for amounts for losing the cases? Because first of all, we'll have to assess the case. The case has a situation of 50% being lost and 50% being won. So it's a 50-50 situation. So that's why we'll not say that for 10% create a provision, for 30% create a provision. First of all, look at this case as a whole. Case as a whole has a situation of 50% being lost, 50% being won. That's why we don't get into that. That will be incorrect if you create a provision of only 10%. Okay. Then I think Gadam responded for the previous one already. Now, further to this, let's move on to restructuring. So you can all move on to page number 1.147, restructuring. So let's try to understand the meaning of restructuring and how do we need to deal with this restructuring? So what is a restructuring? Restructuring could be internal or could be external to an organization. See, for example, an entity has got 3 lines of business. Okay, let's suppose an entity has got 3 lines of business. This is Galam Limited, which has got 3 lines of business. So they are into manufacturing and they are into trading. So manufacturing they do for certain products, and trading is for product A, and third one is for trading of product B. All right. Now, the company has been incurring losses significantly over the years in respect of this third line of business. So these two have been profitable, but this third one is loss-making, and the company now wants to shut it down. So company wants to do away with this third line of business. What do we call it as? It will be considered to be a restructuring. Yeah. There could be another type of restructuring wherein, let's suppose entity has got various levels or various hierarchy levels in its organization structure, which it wants to change. Yeah, many a times organizations do this. That will also be a sort of restructuring. Now, in case of a restructuring, let's try to understand the implications. What will happen? Whenever any restructuring will be done, and if it involves business, so definitely business will be impacted. Yes or no? So if you do away with this trading of product B, so the business will be impacted. There must be some employees who are associated with this business line. Something will have to be done with those employees. Maybe that we can move all of those employees to these 2 lines of business, or some of the employees can continue and some of the employees may have to move out. Correct? Third, certain assets and liabilities may be attached to this line of business, which may no longer be required. So they may also have to be disposed of. Yeah. And for executing this entire structuring plan, certain legal formalities may have to be completed, certain accounting formalities may have to be completed. Yeah. So all of these things may involve a cost on the part of the company. So this standard deals with accounting of those costs which are associated to this sort of restructuring. Understood the meaning of restructuring and what is it that we are trying to now understand? Yeah. So now the standard says that this could be either type of restructuring, and a restructuring provision means a cost for a restructuring should be considered, should be included, which may arise from any of this restructuring sort of thing. Okay. The only thing is we always need to remember that the cost that we are going to now discuss, for which a provision will be recognized or provision is being considered, should be associated with this restructuring only. But some of the costs which are not included as restructuring provision include retraining or relocating contingent staff. So if there is contingent staff, then some of the staff members may have to be relocated. Some of the staff members may have to be retrained or their training may be required so that they can now work on some other part of the company or some other business line of the company. A company may also have some marketing costs and may also require some sort of new investments in new systems, in new networks. Those costs do not form part of this type of restructuring. So whenever we will consider creating a provision for restructuring, those costs will not form a part. Okay. Now the thing is, when do we create that provision? And under what situation provision should not be created? So the standard says that there is a criteria which is mandatorily required to be fulfilled only when restructuring provision can be recognized. So I'll go to that criteria now. And this you can consider as important. For restructuring, this recognition criteria is important. So what is the recognition criteria? First, entity should be committed to the sale. Entity should be committed to sale. That is, there should be binding agreement. Should be there. Number one. Number two, entity should be actively involved in this. There should be a clearly laid out plan. See, let's suppose if an entity is thinking, I'm saying thinking, that let's dispose of this plant B. So in our example, this third line of business, I'm just calling it as plant B, or say trading line B. Let's dispose of this trading line B. But internally, nothing has been done. Board of directors have not approved this. Nothing has been done in respect of finding a buyer who will take over this business or how the assets, liabilities will be settled. Nothing has been done. So in such a situation, should we really consider creating a provision for the restructuring costs? No. First, management should have internally finalized. Means there should at least be a board approval for doing this. Board means board directors approval. Approval of the board of directors. Yeah. Number two, this commitment should be visible on the part of an entity, which is possible only when they are actively looking for the buyer. Yeah, they are actively involved in marketing for this, and there is a binding agreement for the execution of this restructuring plan. Only and only then we will recognize this restructuring provision. Otherwise, no. Okay, clear on this point? Any questions, any doubts, in case you have, please let me know. Then we'll pick up one illustration. Sushil is asking, sir, what is the necessity of contingent asset in AS29? See, it's a concept. Necessity is it's a concept which you need to know. That's why standard is covering this. Poonam is saying, sir, we can say that new provision will be credited old provision will be debited. I didn't understand the context. Now, for which one you are saying new provision will be credited, old will be debited. So maybe you can just clarify this point down. Any more questions from your side? So then I think we can pick up this illustration number 2 on page number 1.151, and you need to solve this. Page number 1.151. Polan is saying for restructuring, we can say that new provision will be credited, old provision will be debited. So we are not talking about creating a new provision as against an old provision. We are saying that we are looking at a situation when a provision is required to be recognized in respect of restructuring. There's no old provision over here. It's only a new thing which has come up and which needs to be recognized. That is how you need to understand this. Okay. Manish is asking if provision will be made before the restructuring process is completed. See, when this plan gets executed and the recognition criteria is made, you will create a provision. With this entire restructuring to get completed will take a lot of time. This generally goes on for months and at times for years also. Gilbert is asking, sir, why should we create a provision when there is a sale of business in restructuring? Because the sale is not yet executed, it's in process. And there are certain costs which are attached to this which need to be recognized. Okay. So we can now move on to this illustration number 2, please. Axis Limited is in the process of finalizing its accounts for the year ended 31st March X2. Company seeks your advice on the following. Company's sales tax assessment for the assessment year X1 X2 has been completed on 14th of February 2000 X4 with a demand of 2.76 crore. This pertains to 2000 X1 X2. So demand pertaining to this year has been raised in X3, X4. This demand is raised. Company paid the entire due, means this entire demand, under protest, without prejudice to its right of appeal. So company paid the demand and this is under protest. Company filed its appeal before the appellate authority wherein the grounds of appeal covered tax on additions made in the assessment order for a sum of rupees 2.10 crore. So the demand was received for 2.76 and the company filed an appeal for 2.10. Yeah. So now for this one, this first one, can you tell me how will you deal with this in terms of its accounting? Quickly, how will you deal with this? what's the accounting treatment? Please don't look at the solution. I would suggest if all of you can just try to solve it on your own. Anushka has already answered this. She's saying the first one means this one should be a contingent liability. Can you also tell me the amount which should be there for this contingent liability? Anushka is saying 2.10 should be the amount of contingent liability. Okay, very good. What about others? Yes. I'm waiting for a response. Quickly answer this. Gilbert is saying the balance of 2.10 crore is treated as contingent liability, which will be disclosed in the financial statements. Okay. So if we look at the solution, in this case, out of 2.76 crore, 2.10 is disputed by the company. Means 0.66 is the amount over which there is no dispute. This seems to have been accepted by the company. So if the company has accepted this amount, what should the company do? The company should create a provision for this. Because over this, there is no dispute. So this needs to be recognized as an expense in the financial statements. As around this amount, 2.10, nothing is specified in the question. Whether the company will win this, lose this. So we are considering this to be a situation of 50-50, and that's why we are saying that this should be considered as a contingent liability. 2.10 will be a contingent liability, and the remaining amount will be created as a provision. And in terms of its accounting, let's try to see what is the accounting entry which the company will pass. They have already paid 2.76 crore. Yes or no? So let's understand the accounting entry which they will pass. Can any of you help me with the accounting entry? I think Poonam has already shared the accounting entry. Very good. Poonam is saying provision debited to bank. But this is part entry you have shared. Can you share the complete accounting entry? Sakshi, Kushi, they have answered this. Priyanka has answered this. Very good. I think I missed a lot of responses. Surti, Manish, they are all giving the correct answers. Jameel has answered this. Kamal is asking why the provision should be created. I'll let you know. So let's understand the accounting entry which will be passed. Money has been paid out of the bank. So we'll say to bank 2.76 crore. This much amount has gone out, so definitely bank will be credited. And we understand that a provision will be created. So an expense will be debited for 0.66 crore. Yes or no? Yeah. What do we do with this amount of 2.10 crore? Another debit has to come. So where do we take this amount? This amount will be considered as receivable by the company. Why? Because company has even though paid this amount, still company is thinking that they will get back this amount from the department. So that's why they will keep it as loans as an asset to be grouped under loans and advances. So the company will say loans and advances debited to bank. And over and above this, they will disclose contingent liability in respect of this 2.10. Clear, all of you? Manish has shared the accounting entry. Great. So I think one part you had shared, the remaining part I have completed. Okay. Yeah. Clear. Clear on this? So I think the second part of this illustration you should pick for your homework. Illustration number 2, part 2. And other thing is that there are certain questions given at the end. Yes, so if you go to page number 1.152 of the study material, there are some MCQs, and after MCQ there are some questions, theory questions, practical questions. All of these need to be practiced by you, and out of these you can just pick up in relation to the topics that we have been covering. Yeah, you can just start practicing all of these questions. Okay, yeah, that is also your homework. Please remember, all of these you need to practice, please. All right, yeah. So this we have done in relation to AS29. We will pick up another standard now. But before that, if you have any questions, any doubts, let's discuss that. So I think we can now start with AS22. Have you all completed property, plant and equipment? Quickly confirm. Have you all completed property, plant and equipment? I think it's AS10, which you would have covered under paper 1. Quickly confirm. Venka is asking, sir, why should we create a provision? Because 0.66 is the amount which will take to expense. By provision, we mean to say this needs to be booked as an expense. Just go back to that accounting entry which I shared. This 0.66 will become an expense. So provision is nothing but an expense. Ramakrishna is asking, sir, finalizing the accounts in the year X2, but the assessment is completed in the year X3, X4 with a demand. How do you know about creation of provision in year X2? So we are not doing those accounting entries in X2. We were doing those accounting entries in X3, X4. Please. Aditya is asking, sir, since it's the sales tax assessment for X1, X2, why didn't the company provide any amount in that year itself based on self-assessment? Company would have done or would not have done, we are not sure about it. We are just saying that as around that assessment, assuming nothing was done in X1, X2, what do you do in X3, X4? Let's suppose at that point of time in X1, X2, company thought that there are remote chances of losing the case. Yeah, assessment may change. Okay, so Sakshi, Kamal, Manish, Jameen, Kushi, they are saying yes, we have completed BP, Aditya, Anushka, very good. So then I would suggest we can pick up AS26, Intangible Assets. Because many principles of this standard will be similar to what you would have covered under PPE. So I am picking up AS26 now. So you can all move on to this intangible assets, page number. So let me just tell you the page. You can go to page number 1.123. So we are just starting with the standard now. And in relation to the standard, you can just say that this is very important standard and very relevant also in terms of its practical application. In most of the organizations, you will see its application. So that's why it's very, very relevant. Okay, yeah. So let's start with the standard. I think I have a couple of more queries. Gilbert is asking, sir, this 2.10 loans or advances, what would be its treatment when the case is lost? So this will become an expense. So this asset will be derecognized, as expense will be voted. Nakul Singh, where will this contingent liability be disclosed? In a note. There is a separate note under the head contingent liabilities. So look at the financial statements of any of the company, look at their annual report, it's available on the public domain, you will get to know about it. Okay. Now, as around the standard AS 26 on intangible assets, there are many principles which are similar to AS 10 on PPE. So that's why what I would do is, at many places, whenever I'll find those principles similar to PPE, I'll just try to correlate them. This will help you in two ways. One, if you have understood PPE in a good manner, let's suppose if you know the concept of PPE, then immediately the same concept you can apply in case of intangible assets. Secondly, at the time of examination also you should try to do this, because this will help you in saving time for the purposes of the revision. Okay. So now starting with this intangible asset, with the definition. So what is an intangible asset? Intangible asset, we can say, is an asset which is without physical substance. And standard gives us some more things which are attached to this. It should be identifiable, non-monetary, without physical substance, and the one which is held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. Now, if you look at this last part of the definition, can you tell me, is it similar to what we see in case of PPA or not? Or do you see any difference? Quickly, I'll need your quick answers now. This last part of the definition, do you find this similar to what you would have discussed in PPE or not? Quickly. Tell me quickly. Manish, I'll have to come to your queries later on this. Yes. Do you find this similar? Sakshi is saying yes, it's same. Now, as around this last part of the definition, I'll just keep it away for the purpose of our discussion because this is something which is in the normal course we get to see for any intangible asset. Let's focus on these criteria. And we can pick up an example for discussing the same. If we talk about software, now for software, what do we see? Do we have any physical substance? No. In a software, physical substance is always missing. So physical substance means something which is tangible in nature. For example, laptop. This is something which is tangible in nature. Building, which is tangible in nature. Plant or machinery, which is again tangible in nature. Software is not tangible in nature. Now, one may have an argument that software is also embedded on a tangible item. For example, if we have to keep a software will be on a drive. Say, in a pen drive, there is a software. So software is there in a pen drive. So just by keeping the software in a pen drive, can we say that this software becomes a tangible asset instead of an intangible asset? Here again, standard says that whenever we look at any item which comprises of two components, one which is intangible and second which is tangible, we need to understand what is the value which is attached to the tangible component. If the value which is attached to the tangible component is something which is insignificant as compared to the total value or as compared to the value of the intangible asset, then we will not consider that to be a tangible asset. And in fact, we will not record this as tangible asset. How do you record it as? You will record it as intangible asset only. Clear? Clear on this point? This is very, very important. Number two, for an intangible asset to be recognized as an intangible asset, I'm not talking about the recognition criteria, but it's something which is coming from its definition. Another very important thing which is required is identifiability. An intangible asset can be recognized only if it is identifiable. So let's understand the meaning of identifiability. What do you mean by identifiability? Identifiability, you can say, means something which is capable of being separated. Yeah? Capable of being separated means something which can be sold, something which can be rented, something from which you can just part way and generate the economic benefits attached to it. Okay, so let's take an example for this. To understand the meaning of identifiability, say for example, if we are talking about software, so we have a software. Can we sell it to a third party? Let's suppose there are no restrictions which are attached. This can be sold to a third party. And when this is sold to a third party, no other party would get access other than that third party to to the economic benefits which are attached to the software. So what does it become? It becomes something which is separable, which is identifiable. Okay. Let us take another example. Say, training of staff. Training of staff means a company had employees which had been trained in respect of some specialized skills which are required for the purposes of their activities related to the business. So staff is not trained for anything, but for the business purposes only, a specialized training has been imparted. Now, after this training is completed, the training cost which the entity has incurred on the staff, the question is, can be considered as training cost as an intangible asset? So let's think about it. Can we say this training is without physical substance? Answer is yes. Can we say that the entity will get economic benefits in future due to this training? Of course, company will get future benefits. There is no doubt. But a question arises as around the control and the identifiability in relation to this training. So I'm just bringing in one more term, control. Now the point is, if you look at this training, is it something which is identifiable? Second, if we look at the control on this training or the control on that staff, so can the company say that the staff is within the control of the company? The answer is no. Why? Because if let's suppose today this training was given to the employee is not bound with the company. Maybe next month, next day, employee can leave the company. So in such a situation, will it be possible for the company to say that the staff is something which is in the control of the company? The answer is no. Staff is not in the control of it. Yeah. So therefore, can we say that this training of staff is identifiable, is it under control? Answer is no. Because of which, this will not become intangible asset. Clear? Clear on this? So clear on the meaning of intangible asset, definition of intangible assets, some of the criteria which are required to be considered in case of an intangible assets. So there are a lot of examples in relation to intangible assets. If you look at brand, if you look at trademark, yeah, if you look at the software, if you look at times in relation to goodwill, they are all what? They are all intangible assets. Okay, yeah. So any questions from your side on this? So Christina had some network issue, and in relation to your query, Christina, I would request you can just park it towards the end of the session, please. Yeah, we will discuss it towards the end of the session. Yeah, any questions, any doubts in terms of whatever we have discussed quickly? Then we'll move further. Yes, questions in case you have. Okay, Ayush is giving some examples. Copyright, patent, yeah, they are all examples of intangible assets. Very good. Okay, so moving further, I think Aditya is looking for a break. So Aditya will definitely take a break. I think let's get done with some more part. Maybe next 5 or 10 minutes maximum will take a break. Okay. Okay, so now moving further on to the recognition criteria. So far, whatever we discussed was all about the definition of intangible asset, or you can say meaning, which is also the criteria for its recognition. But as around the recognition principles, which are required to be followed without looking at the study material piece. And I'm not talking about intangible asset. I'm talking about an asset. For an asset, I am repeating now, for an asset, not an intangible asset, for an asset, what is the recognition criteria? I think this is very, very simple. And all of you can answer this. Anushka said, please explain physical substance again. See, physical substance. So, intangible asset has to be without physical substance. So, let's think about goodwill. Do you see any physical substance of goodwill like a building? No. So, that is what we mean by not having the physical substance. Pranav is saying head for use in production or supply, he did not understand. Means it's something for business purposes. We'll take some more examples as we discuss it further. You'll get that. Okay, Anushka is saying value of the asset. Ayush is saying there should be a probability that future benefits will arise to the organization. Okay, very good. So we are talking about economic benefits. Okay. Any more thoughts on this? Yeah. It's very simple. So she is saying brand can be an intangible asset. Of course, yes. Anushka is saying the value of the asset on the date of recognition, physical presence. Nitya is saying it should be reliably measured and it should be measured at cost. Sakshi is saying probable that future benefits will flow to the entity and cost can be measured reliably. Cost can be measured reliably. Second thing which Sakshi has added to this is that future economic benefits should be probable. So these should be probable. Correct? Then I think Smita is asking for something if you can clarify by their name. Yash is saying future economic benefits. Manish, I think you'll have to wait for some time for this. Okay. Then I think Ayush has added to this, and Namrata is saying inflow of future economic benefits should be there, and cost can be measured there. So this is about the recognition criteria. So when we say future economic benefits are probable and cost can be measured reliably, asset can be recognized. Now, this recognition criteria of an asset, maybe if you want to note down, you can note down anywhere, will apply to every asset that you will have. Whether you go to PP, whether you go to intangible asset, or you go to any other kind of asset, same recognition criteria exists. Okay, so this recognition criteria which you have discussed, okay, which actually you have explained, is going to become applicable to intangible assets also. Clear? And if you'll just go back to PP, you will find the same recognition criteria exists. Okay. Now, moving further. Measurement. So we are now discussing about the measurement criteria. So we have discussed about definition. We have discussed about recognition, which is same in case of PP. Now we are discussing about measurement. Now, in relation to measurement, once again, this needs to be broken into two parts. Measurement at the time of initial recognition and subsequent measurement. Okay. Measurement at the time of initial recognition and subsequent measurement. Now, as around the measurement at the time of initial recognition, once again, this is similar to PPE, exactly same. That the criteria for measurement at the time of initial recognition is to measure the intangible asset at cost always. Same thing you would have covered under PP. Remember, at the time of initial recognition, intangible asset would always be measured at cost. Subsequently, what do you mean by subsequently? Say on 1st of September 2021, patent has been purchased. Yeah. So on 1st of September 2021, when you purchased patent and you want to record this, what we call it as measurement at the time of initial recognition. This is initial recognition. Then, towards the year end, that means 31st March 2022. When at the year end, you will record it or you will check whether it will continue to be recorded at the same amount or not. That is called as subsequent measurement. Okay, I am not touching upon subsequent measurement right now. We'll go to that slightly later. As of now, we are discussing only the initial recognition. Okay, so this will do later. As of now, we are only discussing about initial recognition, which will always be at cost. Fine. Now, as I told you, I just try to draw the principles from PPE at most of the places. So what you can also do is, in your notes, you can just keep marking it. Whenever I say similar to PPE, you can just say same as PPE. By that, what will happen? Whenever you will revise, you can just draw this correlation. So wherever you will write it, and whenever you will study PPE, so you will understand. And in a way, your revision for this one will also be complete. Fine. Now the next point is that at the time of initial recognition, when we measure this intangible asset at cost, what do we mean by this cost? Or what does this cost includes? Okay. What does this cost includes? So this one again is similar to what we would have seen under PPE. Cost at the time of initial recognition, what does it include? You can go to this page. This includes first component as purchase cost. Purchase cost means purchase price. or you can say non-refundable duties or taxes, non-refundable duties or taxes. In case the duties or taxes are refundable, they will not get added to the cost. Any trade discounts, rebates, are reduced from the cost. Correct? Same thing you would have covered under PPE, yes or no? Just go back to the discussion on PPE. Yeah, exactly the same. Okay. Next thing, again the same concept of directly attributable costs. In case of PPE, you would have seen that there is a component of cost which is called as directly attributable costs. What do you mean by directly attributable costs? Those costs which are incurred by an entity for the acquisition of PPE, yeah, or for the construction of PPE, or bringing the PPE when it becomes ready for use. Same thing I'll apply. So any cost which is incurred by an entity on an intangible asset till the time it is not ready for use, that is called as directly attributable cost. For example, let's suppose an entity is internally generating an intangible asset. That is internally generated. Okay. Now, on this internally generated intangible asset, if an entity is deploying its manpower, employees are involved, consultants have been hired, a building is being used exclusively for the generation of intangible asset. So the cost of the employees, cost of the consultant, rent of the building, or the depreciation of the building. What do we call it as? That cost is specifically incurred for construction. That cost is specifically incurred for generation of intangible asset. That is nothing but directly attributable cost. So you can say cost of employees, cost of consultants, rental, depreciation, etc. Right? Yeah. Any cost which is directly attributable towards generation of intangible asset will get added to the cost of the asset. Yes or no? Yeah. Okay. Now, whenever you look at PPE in terms of its cost, it was not limited to two components. So far, we have discussed two components, purchase cost and directly attributable cost. In case of a PPE, there is also a third component that is called as dismantling cost, asset retirement obligation, dismantling obligation. We don't have that third component over here. So I'm just marking it for your reference. This third component is not there. This is only if you are just trying to build in this correlation. No? Otherwise, this is not required. Okay, this third component is missing under intangible assets as compared to PPE. Clear on the components of asset? Yeah. Now, the components of cost of this intangible asset will have the same application which you would have covered under PPE. Exactly. Okay. And we will definitely pick up some examples after the break. So we can now take a break. After the break, we will pick up some examples to understand some of the principles which are attached to this, and we'll also talk about this generation of intangible assets internally by an entity in more detail, which also happens to be the most important part of this standard. Okay, so this next topic, which we are going to pick up in relation to intangible asset, is the most important part of this standard. After which we'll pick up some examples also. Okay. So what we can do is we can just pushing it a bit. So let's take a break. Even if you have got some queries, just put down your queries. After the break, we'll discuss both your queries and the remaining part of the standard. Okay. Hi, welcome back. So we'll now continue with our discussion on the intangible assets. Now, as on the intangible assets, we'll now be talking about internally generated intangible assets. So you can move on to page number 1.128. Now, in relation to internally generated intangible asset, standard prohibits the recognition of internally generated goodwill. Okay, so goodwill, in case it is internally generated, cannot be recognized as an intangible asset. Number one. Next is about certain stages in relation to an intangible asset, which we need to consider. Internally generated intangible asset. We can just say that in relation to any intangible asset which is internally generated, there will always be two stages, or you can say two phases: research and development. So let us now try to understand about research and development. Standard says that till the time an intangible asset is not actually generated, means till the time it has not actually become an intangible asset, a process must be going on for generation. Yeah. So say, when would the intangible asset become ready? So it becomes ready over here. But before this, its generation process starts from here. Okay, so it's a long process which is required for generation of intangible asset. Now, during this process, this intangible asset will pass through two stages: research and development. Standard says that till the time intangible asset is getting generated or not, but the process is in the research phase, or the process is towards this phase of research, then any expenditure which is incurred in relation to that generation of intangible asset, which may or may not get generated, but which is in the research phase, is not capitalized, that is charged off to P&L. In very, very simple terms, before we get into the technicality which is given in the standard, you can say, what is the research phase? The research phase is the phase when the experimentation is going on. But there is no surety whether this intangible asset will become ready or not. Okay. We can also take this example of corona. Now, for this corona, vaccination was under assessment, under examination for a long period of time. So many companies, even till today, many companies are in the process of experimenting. So they are doing research whether this formula. Okay, so now what is the formula? Formula is the intangible asset which they are planning to develop for the production of the vaccine. That is under process. Means they are just evaluating it, whether this formula will work or not. So this research is going on. So till the time it will research, till the time it will stay into research phase, any of the expenditure which will be incurred by the entity is required to be taken to P&L. So that will go to P&L. And any expenditure which is incurred by an entity after this research phase is over. So let's suppose research phase gets over here. The research phase is over. Okay. And the development phase starts. So any expenditure which is incurred after the research phase is over and the development phase starts is allowed to be capitalized. That will not be charged off. That will be capitalized. So now, for the purposes of our understanding, we can look at some examples of the research activities. You can all refer to this page on the study material now. Activities aimed at obtaining new knowledge. Means we are just trying to understand about something new. We are not sure whether that formula will work or not. What is that? Research. Search for, evaluation and final selection of, application of research findings or other knowledge. Again, research. Search for alternative for material, devices, products, processes, systems, services. Again, that's research. Formulation, design, evaluation, final selection of possible alternatives for new or improved materials, devices, products, processes, systems. That is again what? Research. And now we will look at some criteria which are given. Standard says only when those criteria are fulfilled and all of them are fulfilled. Means these criteria are fulfilled and all of them are fulfilled. You should consider as if development phase has started. Means for identification of this development phase, all of these conditions need to be fulfilled. This will also help us to differentiate between this development phase and the research phase. So let's look at this. Technical feasibility of completing the intangible asset is there. Okay. Yeah. So technically this is feasible. There is an intention on the part of the management to complete the intangible asset and then to sell it or use it. Other than intent, entity also has got the ability to generate this intangible asset. Availability of adequate technical, financial and other resources means again the ability of the entity to generate this intangible asset. How the intangible asset will generate probable future economic benefits. This is all about future economic benefits which are expected out of the intangible asset in terms of their financial viability. So let's suppose entity is able to generate the intangible asset, but it's not financially viable to the entity. So all of these factors need to be assessed by the management. Only when all of these conditions are fulfilled, entity will say that the research phase is over and the development phase starts. Let's look at examples of development activities. Design, construction, testing of pre-production or pre-used prototypes and models. Design of tools, jigs, molds, dies involving new technology. Design, construction, operation of pilot plant. That is not a scale economically feasible for commercial production. Design, construction, testing of chosen alternative for new or improved materials. These are all examples of activities which the entity will undertake in the development phase. Okay, clear on this? Yeah. Now, in relation to this, what you need to consider always is that whenever any expenditure is incurred during the development phase, that will be capitalized. Secondly, whenever we will look at that expenditure, we need to go to the principles of cost. Means that expenditure should be directly attributable to the generation of the intangible asset. Say for example, if the company is incurring certain costs from marketing, does it have anything to do with the generation of the intangible asset? No. That's a selling cost. That's a marketing cost. That has nothing to do with this generation of intangible asset. So can we capitalize this? No. Clear? Clear on this? Okay, so then I think we have an example. We should look at this example to understand this entire principle in a better manner. So after discussing this example, I will go to your queries also. You can just move on to page number 1.130 now. An entity is developing a new production process. During the year X1, expenditure incurred was 10 lakhs, of which 9 lakh was incurred before 1st December 2000 X1. So I just put it over here. 9 lakh was incurred. This is 31st March 2000 X1. Yeah. So during the year X1, expenditure incurred was 10 lakh, out of which 9 lakh was incurred before 1st December X1. This is 1st December 2000 X1. So 9 lakhs was incurred. And 1 lakh was between 1st December X1 and 31st December X1. So say this is 1st December X1. So 1 lakh was spread over here. Entity is able to demonstrate that at 1st of December X1 on this date, production process met the criteria for recognition as intangible asset. Okay, that means on this date, development started. Development phase started. Recoverable amount of the know-how. Know-how is the intangible asset which is getting generated. Its recoverable amount is estimated to be rupees 5 lakhs. At the end of X1, production process is recognized as an intangible asset at a cost of rupees 1 lakh. 9 lakh, which is incurred up to 1st of December, will be charged off. So now, as on this 9 lakh, where do you take it? This will go to P&L. This 1 lakh will be capitalized. This will be capitalized. Okay. Now, moving on to the next year. During the year X2, so we are looking at calendar year. I think this is the calendar year which they have given. So during the year 2000 X2, so that means this year, expenditure incurred is 20 lakhs. At the end of X2, the recoverable amount of the know-how embodied in the process is estimated to be 19 lakhs. So 20 lakhs is spent during this year. Okay. Now this 20 lakh is also towards the development of intangible asset. So development started from this date and that has been continuing till 31st of December. So all in all, on development, what is the cost? 1 lakh plus 20 lakhs. So 21 lakh will be capitalized. Yeah. So this will be capitalized. And this cost of intangible asset on a cumulative basis is 21 lakhs. Okay. Now, let's try to understand. Now the next principle that I'm just discussing over here, which has been just very briefly touched upon by the study material, happens to be in relation to AS 28. That has got nothing to do with AS 26. Please remember. So don't get confused on this point. So as far as AS 26 is concerned, what do you need to know? 9 lakh will be charged off, 1 lakh will be capitalized, and 20 lakhs will be capitalized. And these two amounts, 21 lakhs, need to be capitalized. Okay. So a discussion in relation to AS 26 gets over here. Now there is another point which has been touched upon by the study material, that is on the recoverable amount. So it says recoverable amount over here is 19 lakhs. In very simple terms, if I have to say what is the recoverable amount, you can say that the intangible asset which is sitting in the books at 21 lakhs has a market value of 90 lakhs. I'm using this term in a very loose manner. Please don't think that it's the market value. I'm just keeping it very simple because AS26 is not in your course. I'm just touching upon this principle. Now, as against this cost of 21 lakhs, if we have a market value of 19 lakhs, then going by the criteria of AS28, you need to create a provision for the differential in this amount. So 21 lakhs less 19 lakhs. What is 19 lakhs? Recoverable amount. What is 21 lakhs? Carrying amount. 2 lakhs is the amount for which provision should be created. Provision means it appears as if there is a diminution in the value of this asset if you compare it to its market value. So AS28, as I told you, it has nothing to do with AS26. AS28 says create a provision for this. So you will create a provision for this 2 lakhs. Okay, yeah. If you believe there is some confusion on this element related to AS28, just don't get into that too much. For your purposes, what is the most important aspect AS26? Let's focus on that. Okay, clear on this? Clear on this part related to AS26. Okay, so now what I'm going to do is I'm just picking up some more examples for our discussion. And before that, I'll go to your queries also. I think it's been a while. Yes. Please let me know if you have any questions, any doubts, quickly. Any questions, any doubts, please let me know. So Kushi is saying she's clear, Anushka is clear, very good. So if you don't have any questions, please let me know quickly. Then we can pick up some illustrations. Okay, so till time I see more of your queries, you can start with illustration number. Just see. You can start with this illustration number 2, which is on page number 1.137. Let's go to this illustration, solve this, and let me know the answer. Huh? Illustration number 2. In the meantime, let me just see if you have any more queries. No, it seems to be all clear to Ayush also. Priya is asking, sir, how did you note this 2 lakhs? So this 2 lakh, as I told you, this is in comparison to the market value or the recoverable amount. Total cost for us was 20 lakhs plus 1 lakh, 21 lakhs. That is compared to the recoverable amount. When you compare this to the recoverable amount, which is 19 lakhs, as at the end of 2000x2, you get a shortfall of 2 lakhs. That's the amount of 2 lakhs. Vanshika is saying, sir, what will be this 2 lakhs and where will this be treated? This will go to P&L and this will be treated as per AS28. As I'm telling you, this can be a point of confusion to many of you. So let's not get into too much technicality of this because we have not discussed AS28 at all, and that is also not in your course. Okay. Okay, great. So I think we can now move on to illustration number 2 quickly. Companies spend 45 lakhs for publicity and research expenses on one of its consumer product, which was marketed in the accounting year X1, X2. So the company spent 45 lakhs on publicity and research, but it proved to be a failure. State how will you deal with the following transaction in the accounts of this company U Limited for the year ended 31st March X2. I think very simple for you to answer quickly. How will you deal with this 45 lakhs? Quickly, how will you deal with this 45 lakhs? Kamal is saying that it should be recorded as an expense. Vedashri is saying it should be recorded as expense. Very good. So now, as around this amount, question says that this process which the company picked up proved to be a failure. So what do you see? This is a research. Yeah, there's no development which has taken place. Anyways, this is a publicity. Yeah, and the question also says it's a research expense. So what do you do with this? This will simply be taken to P&L as expense. Clear? Yeah. Okay. Now moving on to next illustration. Illustration number 3. This one again needs to be answered by you. You can all start with this next illustration, please. A company with a turnover of 250 crores and annual advertisement budget of 2 crores had taken up the marketing of a new product. It was estimated that the company would have a turnover of 25 crores for the new product. So there is a company whose turnover is 250 crore. They are starting to market a new product. And they are expecting out of this new product, 25 crore will be generated. Means they will be able to have a revenue of 25 crore from the new product. Company had debited to its P&L total expenditure of 2 crore incurred on extensive special initial advertisement campaign for the new product. So on the advertisement, they have spent rupees 2 crores. Yeah, and whatever they have spent, they have charged it to P&L. Now the question is that is this accounting correct in terms of your understanding of AS26? If not, why? What should be the correct account? And once again, I would suggest please don't look at the solution. Answer it on your own. I think previous one was answered by many of you. I missed your responses. Nakul, Priyanka, Manish, Kushi, they all answered this. Pushpa. So this one up. Gilbert, definitely. Gilbert is asking for a summary flowchart. So summary flowchart definitely we'll discuss, but we are not done with this standard as yet. There are some more concepts. After that, we'll go to this. Vedashri is saying treatment is correct. Can you tell me the reason also? Vanshika is saying it's correct. Kamal is saying it's an expense. Anushka is saying it's an expense and turnover of 24 crore will not be recognized. Okay. But why do you think it should be an expense? So all of you seem to be saying it's an expense, but why? Shabbir is saying it's an advertisement expenditure to be taken to P&L as no intangible asset is recognized, but why? Jamil is saying it's correct as the marketing expenses should be charged to P&L. What's the rationale? Manish is saying it's a revenue expenditure, so it has to be charged to P&L. Can you give me some explanation as to why it should go to P&L? Gilbert is saying it's an expense. Quickly. Why do you think it should be an expense? Why should this still be capitalized? Why can't it become intangible asset? Can you tell me? Ramakrishna is saying charge to P&L. Vanchika is saying it's an expense. Kamal is saying because it cannot be held for use in production or supply of goods or for administration purposes. Very good. And other than this, I would just suggest all of you to go back to the definition. All of you to go back to the definition of intangible asset that we discussed. Yeah. Therein, couple of things which were very, very important. One was the identifiability and second was the control. Now, in relation to this advertisement, if we say it's an intangible asset which needs to be capitalized, can we say this can be controlled by the company? No. Can we say this can be separated? This is identifiable? No. So that's why what do? You charge it off. Yeah? Clear? Why should this not be an intangible asset? Because it doesn't meet the criteria of an intangible asset. Okay? Then I think Priya, Sushil, they all answered this. Anushka is saying it's an expense because it comes under research phase. It's not a research. Please understand that advertisement is not towards the development. Yeah? For the development, advertisement will not be considered. Advertisement has nothing to do with development of product. Advertisement is something other than this. So don't bring it into the purview of research or development. It's something which you have to check whether it will become an intangible asset or not. Manish is saying, sir, over here, no new intangible asset has been developed. And we don't have any control over it. Very good. Yeah? Clear? Perfect. Rajeshwari says the product is already marketed. And so the advertisement doesn't form part of cost of product. So anyways, in the examination, at times this question is asked. So advertisement expenditure will never become an intangible asset as per this standard. Yeah, similarly, one thing which you need to always remember is that internally generated goodwill will never be recognized as an intangible asset. At times, some of these small questions may be asked. Yeah, so you should have clarity over all of these principles. Okay. So now moving further on to subsequent measurement. So if you remember, we parked this. We said we'll discuss it slightly later. Yeah. Before I start on the subsequent measurement, you can just note it down that this is exactly similar to what you would see in case of PPE in terms of amortization. Subsequent measurement means cost less amortization, or you can say accumulated amortization. In case of PPE, what did you do in terms of subsequent measurement? You would depreciate the item of PPE. In case of intangible asset, instead of using the term depreciation, what will you use? You will use the term amortization. Okay? Yeah? So this would be the gross amount, and this would be the net amount. This would be the net amount. Fine. Now, in relation to amortization, there are two things which are important. And once again, if you see, it is exactly similar to what you would see in case of PPE. Cost less residual value divided by useful life. How do you compute amortization? Cost less residual value divided by useful life. Say for example, there is a software of rupees, say 2 crores, having a residual value of nil and an expected life of 4 years. So what will be the amortization? Rupees 50 lakhs. Okay. Now, for this amortization, a couple of terms are important for us to understand. What is the residual value? Second is the useful life. Now, what is the useful life? Useful life is that life over which intangible asset or this intangible asset is expected to be used. This needs to be estimated by the management. Yeah. What is residual value? The residual value is that value which the company will be able to generate when this asset is disposed of after completion of its useful life. Software has a life of 4 years, so that means after 4 years, if the company sells this, they will be able to get this. Generally, you will see residual value to be nil in case of intangible assets. Unlike PPE, where residual value will generally be there. For intangible assets, generally it will be nil. Just think about the intangible assets. Very rarely you will see there will be any residual value. Okay? Okay. Now, if you look at this useful life or the residual value, what are they? They are all estimates. They are all estimates. And these estimates, because they are subject to revisions, as we discussed in the last session also, they are all approximations. They are all subject to revisions. They are required to be properly assessed by the management. Yeah. They are required to be properly assessed by the management, and they are also required to be reviewed by the management. If at all any change takes place in these estimates, how will you deal with this prospectively? You will change it prospectively. Number 2, for this amortization, similar to what you see in case of depreciation, there are few amortization methods. Let me just go to those methods also. SLM. What is SLM? Straight line method. WDV, written down value method, or which is also called as diminishing balance method. Number 3, UOP, units of production method, wherein instead of picking up life, what do you pick up? Number of units. Say if we have any intangible asset, we say we will be able to generate 1 lakh units using that intangible asset. We are not saying that intangible asset will be used over 3 years, 5 years, 6 years. We are saying out of this intangible asset or using this intangible asset, entity will be able to produce 1 lakh units. Now let's suppose in the first year, 20,000 units are produced. So 20% amortization will be charged for that intangible asset. That is called as units of production method. SLM and WDV are very, very commonly known to you. You all understand this, huh? So that's why I'm not getting into technicality of these two methods. These are all very much clear to you, correct? Yeah. So these are the methods which you need to remember, which you need to understand. Secondly, please also remember, now this can be an important point for your examination, and from PP's perspective, generally I have seen questions getting picked up for this, that amortization is what? It's based on estimates. It involves useful life, it involves methods, it involves residual values. Amortization is nothing but an estimate. And the standard requires that at every reporting date, all of these estimates should be reassessed. If at all there is any change in this, that change should be made prospectively. And let me just try to explain this. So I'll just pick up this same example of software. Let's suppose for software, in the first year, we estimated useful life to be 5 years. Now, instead of 4, I'm making it 5. So, in the first year, what will the amount of depreciation this divided by 5? Rupees 40 lakhs. Correct? And what will the carrying amount of the intangible asset? 2 crore less 40 lakhs. It's rupees 160 lakhs. This is going to be the carrying amount. And this is amortization. Let's say if we move on to second year. Now, second year, what is the balance life of this intangible asset? 4 years. Balance life is 4 years, over which we should charge amortization. Over which we should charge amortization. Correct? Let's suppose over here, this useful life is reassessed. And now the management is estimating that instead of 4 years, it should be changed to 2 years. Means all in all, it's 3. Estimate has been changed. So now what is the prospective treatment? This 160 lakhs should be amortized over remaining 2 years. So as a result of which, what will happen? 80 lakhs will be the amortization charge in the second year and the third year. We will not go back to first year and change the amortization. No. We will make it prospective. Yeah? Clear on the meaning of prospective? I usually think a change in estimates will be dealt with according to AS5. See, in AS5 also, we discussed about change in estimates and the prospective treatment. So it's the same principle. It's just that I'm just touching upon this example of intangible asset for more clarity. Otherwise, you are correct. Clearly saying, sir, how is the amortization treated in accounts? So this amortization will go to P&L. This is the carrying amount of the intangible asset. Then this amortization amount will go to P&L. And what will be the carrying amount of the asset? Carrying amount of this intangible asset will be 80 lakhs. That means 160 lakhs minus 80 lakhs. Clear? Satish is asking what is UOP method? UOP method, as I explained, is the method which is based on number of units produced by the entity instead of number of years. So if we say that out of this intangible asset, let's suppose using this software, let's suppose this software is used for production purposes. Entity will produce 1 lakh units. So now in the first year, if the entity produces 20,000 units, so 20% has been used out of 1 lakh which is expected, so 20% depreciation, amortization will be charged. That is called as UOP method. Okay, clear? So any questions, any doubts in case you have on this, please let me know. Because with this, we are done on this standard. And in the next session, when we meet, we will pick up a new standard. And my strong advice to all of you that please make sure that because we are now covering up accounting standards one by one, so you at least revise that once. At least once you should revise that and make sure that you practice the questions. Even if you practice the same questions we discussed in the class earlier on, that will be good. So don't think that you are looking, you need to look for the new question. The same questions you can practice. Okay. So before we wrap up, let's quickly get on to your queries. Pranav is saying, sir, in case there's a change in estimate, do we need to mention it as prior period item? No. It's not an error. It's a change in estimate which has taken place because of the new conditions. Yeah, which was not there earlier. That's why it's not an error. Basics it, then why to use amortization? We can use depreciation. No, for intangible assets, you will use the term amortization, not depreciation. Vanshika says, what is the substratum of an enterprise? I'll have to just look into this. Kamal is saying, which accounting standards are important for the exam? All. Yeah, all. So don't think that this one is important, this one is not important. Mayushi Singh said, can you tell which standard we'll do next so that we can touch upon on them next? I think in the next session we'll pick up revenue in terms of AS7, AS9, and of course AS22. Yeah, so we'll just try to pick up all of these three. I'm not sure whether we can start with AS22 or revenue. We'll decide. Ramakrishna is asking, sir, in the second year, instead of 4 years reduced to 2, but what if in another case, if this was 6 years instead of 2 years? So in that case, the amortization amount going forward will be cut down. Simple. Let's suppose now instead of 4, it becomes 6. So we'll make it 6. We'll make it 6. So it's not necessary that the useful life has to go down. This can also go up. So which is a fair point. So you'll compute the amount. Yeah. So this amount will change. Yeah. Either way it can go. Standard doesn't say that this has to go down. Standard says revision. It can be either way. Okay. Then I think Vanshika is asking for the substrates. So, what is it that you are looking for in terms of substratum? If you can just clarify on this point, I'm not really clear on your query, Vanshika. Manish is asking, so change in estimated life based on assets and impairment based on changing value of assets, because both cases affect the continuing value of assets. Yes, that's true. Then I think Anant Raman has a point. He's saying intangible assets developed for sale in normal course will be dealt as per AS2. Yes. Okay, very good. So Nakul is saying is all understood. Very good. So great. I'm just hoping that you are finding all of these standards to be simple, as I mentioned, and this can be a very, very strong point for all of you in the examination, because a fixed question is there in the exam from these accounting standards. These are very simple if you just understand the concept. So what we can do is we can end our session over here. In the next session, we'll pick up new standards. And thanks to all of you once again for the time which you have shared, for the wonderful participation which you have shown. Thanks so much.